What an extraordinary bull market. Does anyone know it?
Well, look, I think as I talk to investors, nobody is sitting around saying, hey, the Fed's going into easing mode. It's time to, double down. I talk to a lot of people who are very worried about where the economy is headed, who are very worried about where the market is headed. I'm probably more in the neutral camp. I think we're going to bob around through year end, but I would say pessimism is pretty high right now.
Pessimism is pretty high, and then we adjust our earnings glide path, our revenue glide path. What are the dynamics of that right now? I know we're reducing our earnings expectations, but is it a big deal?
There are puts and takes. So we just pulled down our earnings estimate from about 5% growth this year to 2%. But because we think the Fed is gearing up to ease, and we can debate about when exactly that happens, that helps the PE multiple a little bit. So we actually didn't change our year-end price target. We think you lose a little bit on the earnings side, you gain a little bit on the multiple from support on the Fed.
Lori, why is the Fed actually, talking about cuts? Was the last interest rate hike a mistake, or is it because they're worried about the trade war?
Well, look, I think the market thinks that the last interest hike was a mistake. And, we do think the Fed is pretty focused on the trade war itself. But again, it's a question of why is the Fed worried about the trade war? And I think you just have to look at any major index of corporate confidence, CapEx expectations. They were all unbelievably high at the middle of last year. When the trade war flared up, they started to sink, and they're continuing to sink now. So the question is that deterioration in corporate confidence going to have an actual impact on things like CapEx, on actual things like hiring? And, my personal view is that the Fed is not really going to move unless they're pretty convinced that the data is going to actually degrade and deteriorate.